Okay, market update for spring 2024 for London, Ontario. Start off with median sale prices. Still struggling somewhat, but for context, London is doing a little bit better, or rather recovering a bit better than some of the neighboring markets, like, say, Waterloo Region, for example. Median sale price was 609,900 in April 24, which is somewhat lower than the 23 median of 621,500. But the last two quarters have seen some good progress. Now, looking at median sale prices by category, asset category rather, there's nothing really of note here. Single detached have done well. For the keen-eyed, condo prices are at levels too low to post on this graph. London condos are cheap, man. So April, for those of you interested, April 23 median price was 383,000, and this year there were 350,000. Okay, let's take a look at the historic median prices from 2011 to present, and we're going to drop a trend line, second order poly for the sports fans at home. We can see that prices are well below where we would have guessed they would be if we were looking forward from 2011. Now, you make of this what you will, but I think there's still what I call the COVID hangover, where the market is still recovering from the, let's call it what it was, irresponsibility and frenzy of 2020 and 22. There was, coming out of that, and still is to a small degree, a general feeling in the buying side of the market of enough. Now, that's going to cycle out with time, of course. But the other interesting thing is the message from this data identical with most other municipalities in southwestern Ontario. I could have used the comparable rather graphs from Guelph, Brantford, Waterloo Region, all identical. Okay, let's talk about sales. So sales generally across southwestern Ontario are weak. London, no exception. So April of 24, 480 sales. April of 23, 487 sales. Both are under the average of 500 sales per month. That's over the past 5 years. Now, it's only a difference of 20 sales between this April and the average. And it's arguably close, yes. But the beginning of the spring market, that should be well above average. So things are slow. Increasing supply is one of the big factors in the market we should be keeping our eye on. So month supply of homes for sale has been climbing steadily since late 21, and in April sat at 3.2 months. So this means that it would take over 3 months to sell everything that is on the market today. Now, for some context, in December of 21, it would have taken 6 days or 0.2 months to sell off all that inventory. So we've going from days to months of supply, right? So a lot more houses. Generally speaking, though, for you to know, 2.5 months is more or less what we'd expect looking back over time. So anything above that is worth keeping our eye on. All right, sale to list price is sitting under 100% mark at 99. Good work, London. This is good news for people who are not fans of the best bid dates, with sellers listing low and hoping for multiple offers. So anything, just so you know, anything under 100% is an indication of sellers moving away from this practice. So in practical terms, if you think your house is worth 700, you list it for 725 and not 500, and then tell your neighbors how much over asking you got. We all knew you were going to get 700. So for context, again, the usual list to sale ratio, 96 to 98% of asking. In 2022, it was 25% over asking. So in conclusion, prices are still struggling. Inventory is trending up. Keep an eye on that. And the number of sales are stubbornly low. As always, if you have any questions, please feel free to reach out. I'd be very happy to hear from you. Contact information is in the description below. And if you made it this far, take 2 seconds, please. Just like, subscribe. It's appreciated. Okay? Thank you, and we'll see you next time.